everybody. I'm the Einstein Wall Street out front of the New York Stock Exchange with my man Dan Ives, #1 tech analyst in the world. Markets trading at record highs, even in the eyes of all the crazy uncertainty. Still, there is a reason. We're going to break it down. Tesla earnings, so much on the tape. We're here to break down the story. This is the big breakdown with Einstein and Ives, my man. Let's talk. Tesla earnings yesterday. Let's just break out right out of there. Talk to me. They missed on both.
No,
and the stock's down $21. Where do we go with that?
I mean, look, my view, and you know this, this is an AI company.
Okay.
It's about autonomous robotics.
Right.
Is it going to be great in the next...
So it's not a car company. It's
Look,
it.
I believe you had a car company.
Right.
You now have an AI company.
Okay. That's super important for you all to know.
We're in a transitional period for Tesla, going from an EV company to what I view as the future in AI.
Gotcha.
Now, the next few quarters, it clearly could be choppy from a delivery.
Understood.
But we believe $1 trillion of the valuation is AI. The next year, you're in 25, 30 cities in terms of RoboTaxi.
Okay.
So when you have sell-offs like this, just like me and you have talked about before, from Nvidia to Microsoft, and we'll talk about Alphabet and others, I view these as the buying opportunity.
Buying opportunity. So think about it. Why did it sell off? The main thing that came out in the conference call was because auto sales were down. Not because of any of what's going on in the infrastructure, not anything about Elon Musk, so if you're thinking of the company now as transitioning from being an auto EV company to an AI company, the next couple of quarters are still going to be extricating that part of the story to be AI, and that's where it's going to get its boost.
It sets up for what I view as the two biggest AI stories.
Okay.
When it comes to physical AI, autonomous and robotics.
Right.
It's Nvidia and Tesla.
Right.
So, look, I just view it as, okay, is it some short-term pain? Yeah.
Yeah.
But we've been there before.
Right.
So we don't, $500 PT, we're unfazed.
You know, and look, everyone needs to understand that, you know, stocks have their inert or innate value, and this company's got multiple components that make up its value. One of its was an asset for a while, maybe a little bit of a liability, is the relationship with Elon Musk and Elon's relationship with the president and all of that chatter, right? Which is meaningless. It does not really have anything to do with the company per se, but people's perceptions get locked up in that.
But I also think it's getting less political. I mean, in other words, I know he did the third party, but you are seeing him back off and become more of a
businessman.
A wartime CEO.
Yeah, and I love that. Okay, that's good. So explain to me, we've been talking about over the last couple of days, yesterday, NASDAQ, S&P trading at record highs, Dow on its way there. Yesterday, we had a major boost from the night before, Japan, a deal. The president announced it, right? I don't know what the percentage was. You'll be able to tell me. Then during the day yesterday, we had another beautiful boost when they did come out with, and I've talked about this a lot, which is the EU deal, right? I told you that the EU president, when they decided to make a deal, they went. Then the president said that was a really defining moment in the whole tariff space was when EU came up for tariffs, and the president called Trump and said, "We are ready to make a deal. We need a little time." And the president responded beautifully. It wasn't somebody going up against him or pushback or any of the things that all the other companies have done when he brings up, or countries have done when he brings up AI. He appreciated the respect of the callback and the request for a little bit of a timeline, and they're going to get it, and there is going to be a deal. So there were 2 or 3. Look, while we've been focused on the Middle East and all of that stuff, there's obviously been a lot of backdoor diplomacy going on, right? Deal, done, Lutnick and Besant. In fact, over the last couple of months when we didn't hear from them, they were on the back of a milk carton. They were doing their job.
Well, and a lot of the deals, even when they'll have the initial tariffs, they're in chalk or pencil, not pen or marker.
Yes.
So it's like the market continues in this poker game to be like, hey, that tariff
that's not the real deal.
That's not the real deal. And I think when you're seeing like the Japan deal, that was bullish because 15%. And obviously, in Japan, talk about the investments that they're going to be making in the U.S., $500 billion. But it shows there's going to be this give and take. And it always goes back to what me and you have talked about from the beginning. Reciprocal, you're always going to have baseline tariff 10%.
Right.
Think about like a VAT or whatever that they do in Europe. if you get to these 15% type levels,
right,
market could digest that.
Right, that's acceptable.
And now if you look, like recession odds have gone from 75%
right
to less than 20%.
Yeah.
Because market's starting to bake in a much lower baseline
right
for tariffs.
So they'll look that, and we had talked about it. You said a number of weeks ago when we still didn't know a lot. It's funny. I guess his negotiating tactics are fascinating because you throw out 185, you go down to 145, you're down to 70. By the time you make a deal at 10 or 15, you are looking really good. Yep. So forget the taco. Go out there and get a hamburger. I mean, it makes sense in a way. And so you said to me a number of weeks ago, you believe best case scenario 10, worst case scenario 15. The market can handle that. And the Japanese stock market told us yesterday they can handle it because Nissan, Mitsubishi, all of the Japanese car companies, once that deal was announced, were up 5, 8, 12, 15%.
Because now they're going to have U.S. more as a market.
Right. So that's huge. Okay, good. So,
and then you look at big, and then you combine that with inflation's been tame.
Okay.
Then on the other hand, big tech earnings, Alphabet, they stepped up 10 billion more of CapEx.
Okay.
So you're starting. So what that's showing, this AI revolution,
right?
These companies are not slowing down.
Right.
They're accelerating spend.
Right.
That's hugely.
That's
bullish.
huge. Okay, so Dan and I lived through on CNN and here on Einstein and Ives that whole weird transition from February 19th to April 19th, the sell-off of 20+%. We lived through that. What was in fact a very good earnings season, Q2. But it was scarred by the inability for companies to give guidance. We know that. We talked about it. We identified it, and that is huge. We had not seen an ability to give guidance going back to 2021 when Jamie Dimon said in November, I can't give guidance because we don't know everything about COVID. The inability this time happened from they were not able to find cost of goods sold when we had boats lined up in China Harbor, when we had the port in LA running at half, when we had truck stops in the Midwest that were sitting there empty because of the fear of 145, 125 tariff, where nobody wanted to take delivery of product because they couldn't even afford it and it was so much uncertainty. Now we have good earnings season out of the gate, the banks,
and more
and ability for clarity and guidance.
And a resilient consumer.
Yes.
So when you put it all together, I think market goes higher.
Yeah.
I mean, it goes back to that's how we've talked about that bull case, 6,800, 7,000 S&P.
Yes.
We're starting to get to a point where I feel like you go through this earnings season,
right.
You get these strong numbers like we saw so far this week.
Right.
I think market then runs in the second half of the year. Plus, you get a Fed cut at one point, October, November, December.
Right. You think it's that far off? You don't think we something in September?
Because I think Powell's going to continue to be wait and see, just given tariffs and some of the uncertainty. Right. But I do believe that setup is bullish for tech stocks.
You know what? Look, I always say the market tells you what it thinks of the information, right? When markets feel that there's inadequacy, uncertainty, fear, surprises, market sells off. It's just a one-to-one. And now, it's definitely digested all the chatter. It is accepting all the positivity in the economy globally and domestically. And it's showing us what it thinks of it by being at record highs across the board. Right? There are, look at Nvidia, look at the Mag 7, look at the secondary and tertiary derivative plays are doing really well. You're even seeing quantitative bouncing up, right? So you're seeing so much there. And then you're seeing Microsoft trading at record highs and you're seeing all that other stuff. The market per se, in the big picture, it seems really strong. And look, he's a financial advisor, I am not, but the bottom line is you just look at the market. The market will tell you what it's doing what it wants to do, but it will tell you what it thinks of the whole thing. So we are now, I'm seeing, I always say when people say, oh, do you think the summer's going to be quiet and the little dog days of summer and all that? You know what, I always say, no, it's always been busy and it's always volatile and whatnot. I have to admit we are in a little bit of a pocket where what you're seeing is, and so I love to identify and analyze intraday nuance of the way market works. And your market opens, it usually sells off for whatever reason, whether it's a tweet or whether it's a little bit of news. But we're seeing a beautiful trend from 11 o'clock till 4 o'clock where the market reverses around 10:30 or 11 gets really bullish and has a beautiful trend and flatlines off the top till the end of the day.
Why is it doing that? Like in the beginning, is it just the initial market reaction? Maybe it's and then all of a sudden, as you digest it,
Look, it can be a number of things. Very often, the market will respond on a negative basis when Europe closes, and there's sort of a little bit of what you just sort of offset market orders flow that comes to the U.S. that was not able to be executed in Europe, and that's why sometimes you see a little sell-off. It can be a number of things. It can be just people aren't sure what directionality. I want to talk to you about the maturity that we're seeing in the retail sector, though. Yeah. I think that's really important. It turns out, if you analyze what happened in February, March, April, it was not the retail seller. So retail got their butt kicked during COVID. They were new in the game. They got involved with the meme stocks. They blew up their accounts day after day, week after week. They took them years to come back, but they did come back. And for whatever reason, they did their homework. Maybe they learned from you and me. Go ahead.
They held firm April, May.
They did hold. They were the ones on that day that we had that first intraday reversal. They bought $4.1 billion worth of stock. They did not sell in February, March,
but
April.
Institutions were selling, and me and you have talked about this. Retail won.
Right.
Institutions now are playing catch up.
So if you need an explanation of why the markets are trading at record high now, earnings season solid and the ability to give guidance, a lot of the negative chatter we've grown through in maturity. I think Mr. Trump has also learned how to navigate his way through. Bully tactics are on the downside. Everyone is playing nice in the playground. The sandbox is a happy place. People are not grabbing their ball and leaving the playground. And you've got a lot of institutions, you've said it time and time again, $7 trillion, it was said again this morning, on the sidelines. Mutual funds, institutions, hedge funds were having to play catch up. They got caught off guard some got caught off guard. I kind of think they pivoted out of equities when the administration came along to protect the beautiful value they got from 23 and 24. They said, why don't we see what happens? We'll play wait and see. They were happy for a minute when the market sold off. They got caught off guard by that crazy reversal rally. And now they're sitting here going, we've got to buy stock.
And the number, if you look at like fundamentally,
right,
there's more and more reasons to buy stocks.
Yes. And that's what you're seeing. Because when people have a reason to sell, that's when you see downward trend. That's where you see a real aggressive spike in the VIX and a huge sell-off in the market. That's not what we're seeing. It feels like we're seeing smart buying, buying with intent, buying with conviction, and that's what makes a strong, solid market.
Led by tech.
Led by tech. Never underestimate that. And that's the man. That is the man in tech. The best dressed man on Wall Street. Einstein and Ives. That's all I got to say about that.